Hi, and welcome to another edition of Let's Get Down to Business. We are commemorating the 21st anniversary of the Eastern Caribbean Securities Market. And on this edition of the program, I have a distinguished panel who are going to tell us a lot more about the Eastern Caribbean Securities Market and what it means to be 21 years old. So let me welcome Mr. Trevor Blake, who is the managing director of the East Caribbean Securities Exchange. I'll also welcome Mr. Lucia Fisal, who is the CEO of the Eastern Caribbean Securities Regulatory Commission. Let me welcome two brokers in this whole operation. Mrs. Alana Joseph from the Grenada Cooperative Bank Limited. She is the executive manager, wealth management and financial services. And Mrs. Nolan Gabriel Boy, and she is the head of regional operations for First Citizens Investment. Welcome, everybody.
Thank you.
Thank you, Tony.
Good. So let's kick off. We're talking about the Eastern Caribbean Securities Market. So I want to go straight to Trevor and ask him to explain to the viewers what is the Eastern Caribbean Securities Market.
Right. Thank you, Tony. The Eastern Caribbean Securities Market is a regional market that was created in 2001 to provide a marketplace where securities could be bought and sold across the Eastern Caribbean seamlessly. It is a regional market governed on a regional body of legislation and regulated by the Eastern Caribbean Securities Regulatory Committee. But Gail will speak a bit about that. Ms. Faisal will speak a little bit about that. The market is a marketplace, as I said, for the buying and selling of financial assets. And the things that are traded on the market would be securities, stocks and bonds, debt instruments, the government bonds, corporate paper. Of course, when we say stocks, we are talking about shares, equities, shares in public companies. So those are the things that are traded in the market. The market is basically structured around a number of key institutions. The Eastern Caribbean Securities Exchange, which I have the pleasure of heading, the Eastern Caribbean Central Securities Depository. We have as well the regulator. It sits at the apex, the Eastern Caribbean Securities Regulatory Commission. And then we have the intermediaries, the broker-dealers, which Nolan and Alana represent.
So before we talk to the brokers, I want to get a bit more of a sense of the need for regulation and the role thereof, the Regulatory Commission. So maybe Lucia can come in here and give me some clarity on that.
Yes, thank you, Tony. The Eastern Caribbean Securities Regulatory Commission was established in 2001 at the start of the market. At the time, the governments decided or agreed to come together and establish this the commission. The role of the commission really is to promote the activity on the market by ensuring that whatever persons who are involved in the market are adequately qualified and are licensed to operate. So we license broker-dealers and investment advisors, and we also license the Eastern Caribbean Securities Exchange as the securities exchange for the Eastern Caribbean securities market. The role of regulation really is to ensure that there's fairness in the activities that are undertaken in the market so that persons can feel confident when they invest that their investments are being, well, the activities or the business on the market is being conducted in a fair, efficient, and sound manner.
And you mentioned the word fair. So how much is an investor protected by law? I mean, because I don't know where regulations overlap legislation. So
Right.
so how much, and is
Yes.
because we're part of the currency union, I'm assuming any legislation you talk about is harmonized
Correct.
across the region. So maybe
Yes.
just explain a bit more about that.
Right.
For me.
Right. So the market, as Mr. Blake would have indicated, is governed by uniform or harmonized legislation, which is enacted or has been enacted in each of the member countries. So each parliament in each of the member countries would have enacted the Securities Act and the regulations supporting the Securities Act. Within the Securities Act, there are provisions that gives the Commission enforcement powers. So, for example, if there is an actor or someone is conducting securities business that has not been authorized under the Act, the Commission has the authority to step in and perhaps issue, for example, a cease and desist order to have that person comply with the regulations or the legislation and the law. There are also provisions that would give investors recourse if they feel that if they have sustained any losses. There are provisions in the Securities Act that would provide some level of recourse for investors.
So in other words, we can't have any shoddy or shady companies trading on the stock market and think that they can get away with it like some fantastic pyramid scheme.
Yes, that's correct. That's correct.
I want to talk to the
I-
brokers a bit about actual market trading. How does one trade on the market? Maybe I could start with Alana, and then Nolan, you can come in.
Okay. Well, it's pretty simple to start trading on the market. The role of the broker, well, the broker acts as the intermediary in the operations on the Eastern Caribbean Securities Market. So any investor interested in trading on the market must do so through a licensed broker, a licensed broker, or a licensed broker. As I said, it's pretty simple and straightforward. You first establish a relationship with a licensed broker, and that really entails a customer due diligence process where the broker, of course, confirms and verifies the identity of the investor. And then you, of course, have a conversation in terms of the broker gets a chance to understand the investment goals and objectives of the investor. Of course, having a conversation about risk and risk management. And then we take it from there in terms of looking at what are the opportunities on the market that would meet your needs. And when those opportunities arise, the timing and in capitalizing on those opportunities.
So Nolan, you're from First Citizens, and so First Citizens, like the Grenada Cooperative Bank, is a registered broker with the market. Do you actively advertise, the equities that are, tradable, or as an investor, must I come to you and seek that sort of advice, knowledge? How does it work?
We do have our regulator on the panel, and that's wonderful for this question that you have asked, Tony, because securities trading is not a broad-based type of approach, because it tends to be more sophisticated, and our market regulation has to ensure that clients are understanding exactly what they're engaging in. So as far as advertising, any advertisements that are done in the region has to be vetted by our regulator before they're rolled out to the marketplace. Now, when Alana give her response to your earlier question, she talks about the risk tolerance, establishing the risk tolerance of that investor. Because investment is very unique, it's not a one size fits all. A key component of the broker-client relationship is understanding the risk appetites of that client and ensuring that you're only marketing and those products that match that client's risk appetite. So it really is more of a consultative process versus a very broad-based, hey, we are offering shares at this time. Having said that, We do have a database of existing investors as well as investors who have indicated that they would like to invest in the future. And from that, we would actually reach out to them and have discussions about upcoming issues.
And Nolan and Alana, and I suppose the people who are with the exchange, are there threshold amounts? In other words, could I come in and buy one share of a company, that's trading at $9? Surely that won't make sense. So who sets those limits, the upper and lower limits? Who sets them? I don't know if this is a question for the brokers or for or Trevor.
I think we can take it as the broker. There an issue and the limits, or what do we call it, allocation limits or buckets for any specific issue is going to be basically set by the issuer at the time that that issue is done. So for example, if it's a primary market issue where it's the first time coming to market, it may be stated in the prospectus, which is the governing document for any of the issues that are coming to market, indicated that there are minimum quantities of X. I really have not seen maximum quantities. The only time I can think of where I see necessarily there's a max set on a quantities if there's a cap in terms of the class of investor that can invest. And by that I mean, if you have an issue that's coming to market and it is allocated, say 20% to the, let's take the BOSVG example that happened in St. Vincent, 20% for the NIS, X amount to the public. So of course you're going to be capped by those categories within the quantities allocated to those categories.
Right.
But in terms of a capping by the individual investor, if there's nothing else specific that's stated, there's not necessarily a max.
So is it the case that competitive laws may be, so if the region was governed by a competitive commission, that maybe that's a sort of overlap that may exist if there was no limit necessarily set by the issuer, right? Should Tony Regisford be able to buy 95% of a particular company that's trading, which then gives me a de facto monopoly in the market in which I exist? So I guess that's not your your business. It's a competitive or competition commission.
Correct. And there is a timing issue. So as broker dealers, we are required and we are bound by the rules and regulations of the market. And a big part of that is time date stamping of orders received. And so really it is up to the investors and when their orders are received, and an order is considered received and completed when all documentation, client onboarding, KYC, all client onboarding forms are completed, all IDs, all due diligence checks are done, but also when an order form as well as payment is received.
If I may add to what Nolan has said, there are sometimes restrictions on the maximum that any investor could subscribe in a primary issue. So, for example, if with an IPO or a listing of a new security, the within the prospectus or the offer documents, there could be a limitation placed to prevent any one person from becoming a large investor who would have control over the entity. We also have some listings in regulated areas. For example, some industries like banking, one or a group of connected parties can't own more than, say, 5% of the equity in that company, and there are restrictions in the market to allow for those things to happen. In terms of limits or the minimum amount you could buy, on the secondary market, one could come in and buy as little as 20 shares in a company.
What is the
So
secondary market? Because so we have to establish that. So there's there's the primary market and the secondary market. So maybe it's a good juncture at which you can explain what both of those are, the primary
sure,
and the secondary market.
sure. The primary market is where a security is being brought to the market for the first time. So an issuer, whether it be a corporate issuer or a government issuer, uh, seeks to raise some money and brings securities to sell on the market to gain the capital that's contributed from the sale of those securities. So an issuer, a company, a government seeking to raise capital, sell securities in the primary market to gain the resources from that sale. And that would be a primary issuance. In the secondary market, we are talking here of securities that are already listed, securities that are already held by existing investors, and they're traded between those investors. So
And
in
the
the
market facilitates that particular type of trading.
Absolutely, the
Right.
market. That's we most of the activity in the corporate, in the equities would happen in the secondary market, where we have companies that are already in existence and probably have been in existence for years that are listed on the market, and we call those seasoned issues. Um, those those companies may not be seeking to raise additional capital, but they are listed to enable their shareholders to sell their securities, and other investors are able to buy in that secondary market.
Alana, I have a question for you. You're a broker, so you've sold me some equity in a particular company or concern that's trading on the market, and I now have these. Can I use that as collateral anyway?
Well, we have to remember that the securities you purchase on the market are technically assets, right? And of course, these assets can be used as collateral for various arrangements, and especially with financial institutions. Not only can they be used as assets, but the proceeds from the investments, so for instance, your dividends in some instances, from your equities, or even if you're talking about fixed income securities such as your debt instruments, your bonds and treasury bills and so forth. The returns that you get, the interest payments, can also go towards your loan payments. Of course, that depends on your arrangements, terms and conditions with your financial institutions. But so to answer your question, yes, the instruments traded on the markets can be used as collateral for debt and other arrangements, debt facilities and other arrangements.
Here's another question I have about it comes about from something that you said in terms of gains or proceeds. So capital gains, which is what I'm hoping for when I make an investment. The tax on capital gains, is that something that's harmonized in the region or that varies from country to country? Capital gains tax.
The short answer to that is it's harmonized, because in every country the governments have agreed that for securities issued and listed on the ECSE, there'll be no tax on the gains from those investments. So there's no capital gains tax, there's no income tax on the dividends or the interest on those securities.
So this is a measure, I suppose, to stimulate or incentivize people for using the market.
Absolutely.
Right. So having said all of that, let's talk about how active the securities market is. Yes, go
Sorry.
ahead. You wanted to say
Before
something.
you
You
move
wanted
on,
to say something
I
in
know
that.
you had asked a question about the minimum, to start, and I didn't want to omit the fact that the securities on the regional government securities market, generally the minimum starts at $5,000. And I mean, I know you said if somebody wants to buy one share, if that makes sense, but there are shares on the market as low as $1.30, $1.25. So I wouldn't call it barriers to entry because there are really no barriers. The market is quite open for anybody to really participate, you know. So I just wanted to make that point. And one other thing, I think when you asked about the role of the broker, I mentioned the investor side, and I didn't mention the issuer side. So as the broker, we also represent the persons issuing securities on the market. So we would, of course, help them in structuring their arrangements, the offers on the market, the marketing side of it, bringing it to market, getting the traction in the market and an interest in the market as well. So we perform dual roles in terms of the investor side as well as the issuer side.
How busy is the market, Trevor? How,
Yeah,
we're talking about something that may very well be niche, and
sure,
and I'm sure the brokers on the discussion want to see maybe a lot more activity.
we all do.
Or is there too
Yes.
much?
No, we all do. In terms of, and we could look at it in from both sides of the market, on the primary market and then on the secondary market. On the primary markets, we're very active. Every so often governments, and we have some 5 governments that are actively issuing securities on the RGSM. So the primary markets are quite busy. A few times a month there are auctions of securities. So that is good. We are happy with the. Of course, it could always be improved, but we are pretty happy with the primary market.
Before you continue, keep your thoughts, because
Sure.
we are using the term RGSM, which is the Regional Securities Government Market, and I suppose we need to explain to the viewers that you are divided for a platform for trading government paper, if you want to call it that, and one for corporate entities. So maybe you just explain that a little bit, and then you can continue with the point you're
Sure.
making.
Sure. On the ECSE, we host two different markets. The Regional Government Securities Market, which is a market for governments to raise capital across the region. So in that market, only governments participate in the market as issuers. So they issue securities, whether it be treasury bills, bonds, treasury notes. They issue securities on a regular basis on the Regional Government Securities Market. So that is a market for government securities. Then we have the Eastern Caribbean Securities Market, which is the market for the primary issue of corporate securities. Those would be securities issued by companies and not by governments. And it is the secondary market for all of the securities that are traded on the exchange. So for example, a government might issue a bond on the Regional Government Securities Market, and then they list it on the ECSM, or the Eastern Caribbean Securities Market, where it is then traded between individuals, etc. So that is the distinction between the two markets.
So I understand that. So back to your point about the activity that you want to see increased. I didn't ask specifically how many companies are trading, but maybe you'd choose to give me a sort of idea as to what's your volume, what's your size,
Yes.
not in monetary terms, but in terms of companies trading.
Sure. So we have just to say about the list on the listing board, we have about 160 securities listed. The majority of that represents government debt securities, and those tend not to be traded very often. So typically the investors would buy them and essentially hold them to maturity. So those there's some trading, but it's not significant. Then we have some corporate debt securities. Our major issue in that area is the is ECHMB Capital, and they issue a number of corporate paper instruments, and those again are not traded very often. Their buyers tend to hold them to maturity. Then we have 14 equities listed. That is 14 companies from across the currency union listed. Again, our culture is one of a buy and hold strategy, where persons buy those securities and hold them for either for the capital gains, the dividend, to pass them on to their grandchildren, etc. But these again are not traded very actively. So secondary market trading is quite low. We of course would want to see that improve. We want to see people seeing their shares as a commodity to be bought and sold, and not necessarily as a part of a company. I mean, you are invested when you invest in shares in the capital of a company. You become a part owner of the company. But
Right.
we need to make that shift to see that not as a share in a company, but a commodity that you should be
Right. So
willing to buy and
I
sell.
guess the word is speculating. Is that the right term? You want to see people speculate more with what they hold as equity? Or
Speculating has a particular connotation that
okay.
I would want
So
to encourage
so
because
correct
that's highly
me.
risky. Yeah,
Correct
but
me. What I invite you now to tell me what is speculation and what is the term used for the
right,
buying and selling of
the buy and
securities.
sell is actively trading,
So that's actively trading.
actively
Okay.
trading as opposed to speculating. In markets, there's some degree of speculation
Yes.
because you buy a security because you think that security may increase in value, and then you buy it, you hold it till you see the increase that you were looking for, and then you sell to unlock the value that you would have that would have been
Trevor, let me
accumulated.
ask the brokers here on this point. Let me ask the brokers here that on the discussion. Is speculation not a good thing for you as brokers, or is it just a highly risky, volatile activity that you discourage? I want to get an understanding from your perspective.
I think the way I would look at this, Tony, I would go back to risk appetite and the risk appetite of any individual investor. So, an investor who does not have the risk tolerance for very risky assets, investing in risky assets, we can consider that speculative. I think our responsibility as brokers is to ensure that we are matching the instruments and the level of risk that those instruments carry with the type of investor. And the type of investor will be determined by that investor's goals. It may be their age, their comfort level, what does their portfolio size look like, what their timeline for creation of wealth looks like. So I actually don't like the term speculation because it almost feels like an element of gambling and investing. For some people, it can be, but it really should not be. It should be looked at as a mechanism for the creation of wealth.
Oh, well, right.
I understand that fully. I understand that fully. The companies that are listed, and so we're talking about corporates now. We're not talking about governments. I went up on your website and I, did some research, and it seemed like to me that the share values of most of them over a period of time constant, not shifting at all. What is that an indication of, basically? How does that tell me what's happening in the market?
Yeah, that reflects the low level of activity. A share price would move unless there's a trading it. So the price is determined by what
How much people want the shares? Basically, the demand for them.
the demand, the effective demand for it. So what a third party investor would pay for the shares. So the totally independent person looking at all of the fundamentals decide that share is worth to them, and that is what they would pay for it. Because the share price is determined from the interaction of buyers and sellers. When there's a trade executed, somebody is willing to pay X for the share, and somebody else is willing to sell it for X, and that is how the price is determined.
Anthony,
So when you see,
maybe. Oh, sorry.
Yes, go ahead, Alicia. Go ahead, Alicia.
Well, Mr. Blake was finishing his point. I'll let him finish his.
Yeah, I was saying. So when you see that the share price is not moving, it's an indication that there are very low levels of trades in those securities. That doesn't mean that the security may not be value may not be increasing. It's just that nobody has translated that into a price change on the market by trading at those high levels.
And a big part of that is our culture. And the culture in our market is one, as Mr. Blake indicated earlier, where folks buy and hold. So the level of trading activity is not there. I mean, the things that affect the price of the stock will range from the level of earnings in that company. And as he indicated, a company may be profitable and growing their earnings, and is a very valuable stock from that perspective. But the fact that it's not trading does not mean that no one wants it. It just may mean that for the shares that are there within the market, no one is willing to sell, because somebody has to meet the demand and the supply side, and that's what we see in our market. So it's a bit sticky on the equity side.
Anna Lucy, you were going to say?
Yes, I was just going to add as well that securities markets operate on information. And as Nolan would have indicated, if you as an investor, you would want to know how well your company, the company that you've invested in, is doing. And that is where the regulator comes in to make sure that issuers, those companies that have issued shares to the public that are listed on the ECSM, provide periodic information to the investors. So, for example, there are requirements for issuers to submit to their shareholders their annual reports, their audited financial statements, and this information also has to be presented to the commission. So in an ideal world, what would happen is that you would have information being fed to the market from these companies, and that sort of information would be used by investors and their brokers to assess a stock, to determine, should I keep this? Should I sell? Should I, that is how the markets, the international markets operate. And this is where we want to get to our market too in the 21st, from after this, going forward in our 21st anniversary. So we want to get our market to that level where persons have information and they use that information and it's useful to them to make decisions that would promote that sort of activity that we want to see happening on the market. And just to add a plug, the commission, the information that is submitted to the commission is by the issuers is uploaded to a website, www.ecsin.com. And information on all the companies, for example, changes in management, changes in auditors, their financial statements. The listed companies are required to submit quarterly accounts and reports as well. These can be viewed and are obtainable on or accessible via the Eastern Caribbean Securities Information Network, which is a website that is included as part of the Eastern Caribbean Securities Regulatory Commission website.
So just to tie everything in, I think that is one of the main reasons why you're seeing the inactivity on the market, because there's a general lack of understanding by investors or even the general population, the public, that they can buy and trade. You just don't have to hold. There is an intrinsic value to the asset that they can discover, as an investor. So I think that also contributes to the inactivity we are seeing in the market.
Let's look at the element of risk and who, as an investor, from the investor's perspective, where does he or she get that guidance from, apart from the broker who will show the risk profile of the investment that they're making? But is there an independent risk rating entity that will, for example, on government bonds and government paper, you may have a Moody in some jurisdictions. What exists here?
So in the region, we have an organization called CARICRIS, And CARICRIS is a credit rating agency, and the objective is to actually assess that entity's creditworthiness relative to other issuing entities. So there is a regional scale, which is comparative across the region, and then there is a national scale as well. So CARICRIS does exist in the region, and it's based in Trinidad.
So how do I find the information that they put out there?
So CARICRIS lists the information very similarly to Moody's and Standard & Poor's. One of the things to note is that it is an option of the issuer to actually go through a rating process, because a rating process implies continuous assessment and review, as with the larger rating agencies. And in addition to that, the entity has to also agree to release that rating. And once that rating is released, you can find that online. Now, it benefits entities, issuers, to have themselves assessed and rated, because then that rating factors into investors' risk approval process for the approval for investment into their securities. So there is a framework, and there is quite a great framework within the OECS, a framework that's transparent, that's governed very well, that's highly efficient. It does exist. I just think that we really just have to look at the ways and the means to get that information more out into the general public, not just to investors, but also to issuers, because it is also a very efficient way for issuers to raise capital.
I'm just going to say, CARICRIS actually publishes their ratings for those. I should say there are public ratings and there are private ratings.
Yes.
Some private ratings, those would not be published, but and an issuer could determine whether their rating would be private or public. But for the public ratings, the CARICRIS issues a press release on those ratings, and we would post those ratings on our website for the entities that are listed on the ECSE. So any ratings that by any of the entities that are listed on the ECSE, once it is published, we would post it on our website.
Okay, that's interesting too, in terms of the risk management side of things from the investor's perspective. How does an issuer enter the market? They're not listed. How do you become listed? Let's say I have a corporate entity, and I want to raise some funds. I don't want to go to the bank to raise that capital. I want to raise it through the stock market. What is the process?
They go to a broker dealer, so I allow the broker dealers to.
But actually, there are tiers for different types of issuers. And the market has established tiers for those issuers. There are entry-level equity tiers for equity issuers. And as Trevor would have indicated earlier, we do need to make the distinction between the type of issue that is on the markets. The issues that are on our markets are debt and equity, whereas the debt equities, debt instruments, are more like a loan type arrangement, whereas equity, you're actually gaining ownership in a company. So there is an entry-level tier for equity securities. And as he indicated earlier, on the regional government securities market, those are mainly debt instruments. So the regional government market is generally a debt instrument market. So we're now shifting to where we're looking at how does a company raise financing to start up, if they would, or if they're looking to expand, what can they do in terms of raising debt or equity? So there are tiers for issuers. From my understanding, I think you have to at least be a going concern for the minimum tier for at least 18 months. Is that correct, Trevor?
That's correct. Why I deferred to you, I thought I could go through the actual process of a company comes to you and say, well, look, I want to.
Yeah, so you do have to start with which tier that client may fit into. And so there are established tiers for different categories of issuers, sizes, aging, capitalization. And based on that, those issues can then start going through the process that's established for listing. What has been happening in our market, because as a broker, we have been receiving quite a bit of inquiries from startup type organizations. And I was extremely heartened to see that our regulator has taken the bold step forward to actually start consultation and looking at a framework to provide some level of crowdfunding or venture capital type of raising for those startup type entities. So there are ways to raise money in the market. You would come to a broker and you would sit in consultation with that broker. It is important for companies, particularly if you're going to eventually raise funds in the market, to maintain adequate and proper financial records. I think that is something that can be a challenge a lot of times, because once you are listed, there are requirements for continuous reporting, and that's how the market is protected, and that's how we keep the market efficient, the efficiency of the release of that information. So everyone is making a decision based on shared information, which is the goal of the marketplace.
I want to get the concept of debt and equity fully, explained for our viewers. Now, as my understanding is, somebody comes to the market looking to raise funds, not to sell shares, but to raise funds. They're looking for a loan primarily. They haven't gone to the bank, but they've come to people who are willing to go to the stock market and buy their debt instrument. Is that what it is? So therefore, if it is that, those must be fixed terms, because it has to mature at some stage. When do I get paid back?
Right.
And how is that set? How are these terms set? Who sets the interest that I make? Obviously, I'm not just going to throw money out and not get back the interest. Is it the issuer that makes a promise to pay a particular rate of interest? And does the regulator now ensure that that happens? Explain all of that process to me before we get to the equity part.
Yes, with debt, the issuer comes to the market to raise capital through a debt issue, like a bond or some other type of paper. It could be a note, a shorter term note, etc. The issuer must produce a prospectus, publish the prospectus, in which it sets out the terms of the offer, including the tenor of the instrument, whether it's going to be a 5-year, 10-year, even 20-year bond, the interest rate, whatever that it may choose to offer, and in determining the offer, it would look at the market conditions and see what would be a rate that the public would want to accept for that debt, given its risk profile, etc. And it determines the prospectus will also set out the frequency with which the interest will be paid, and whether or not the payment on maturity of the instrument, or the repayment will be on maturity of the instrument, in which what would be the sort of bullet payment, or whether it will be repaid over time in an amortization. So a bond could be amortized over a particular schedule. So maybe every 6 months you get a portion of the principal being redeemed and repaid to you. So the prospectus will set out all of that. Important thing with that, it's the certainty one, that you will always get the interest, provided of course the business doesn't go bust. So you have certainty in terms of the cash flows from that investment. It will always be paid on that schedule, and you will get your funds returned to you, your principal that you have invested returned to you in full at the end of the period, whether it's in the case of a bullet instrument, or over time in the case of an amortization.
And on the equity side, which is I think Northern was saying this is where somebody's actually selling shares. So there's no maturity here. If I want to dispose of my equity, I have to sell at my own in my own time.
Yes.
And I get dividends based on the company's performance, I suppose.
Right.
So
Right.
so is it the broker that's keeping me abreast with all of this? How do I know what my dividends are likely to be in 2023?
You ask if it's the role of the broker, but as an investor, you also have a role. The investor has a role to monitor the performance of the investment. Remember, it's an asset, it's money that you put out, it's not leave it and forget it. So you also have a role to monitor fundamental and technical information of the company, meaning looking at trends, previous performance, looking at future expectations, looking at the economy, looking at those things to come up with what you anticipate dividend may be, whether they may be or not. But remember, when you make an investment in equity, you're not just looking at the dividend to make a decision as to whether to buy and hold. You're also looking at the value of the asset, whether there have been capital gains, whether you anticipate future capital gains as well. So your decision to buy or sell should not be based only on the dividend or the return that you're actually getting on the asset.
I think I'd like to add that their dividend policies are normally set by a company. So a dividends in essence is a payout of a certain percentage of profit at the end of a year or whatever that designated period may be. So a company may indicate that they may pay out 40% of their dividends, of their profits as dividends at the end of their financial year. So those guidelines are normally set by the company who you are invested in.
And just to add, from the regulator's point of view, Mr. Blake would have mentioned the prospectus. So under the securities laws, every company, if a company wants to offer securities to the public, they would have to prepare a prospectus. And there are guidelines in the regulations as to what information that should be included in that prospectus. And one of the elements or the components that needs to be included, as Nolan would have indicated, is a dividend policy. So as part of the prospectus, you put in, the issuer would need to include the terms of the offer, whether there's a minimum amount, a minimum or maximum amount that they're looking for. There's also, as Mr. Blake indicated, the interest, how it's going to be paid, what your return is like. And there's also information, general information on the issuer. So the company background, you have information on the directors, the managers, what are their qualifications. We also have included information on whether there are any legal matters facing the company that may be, a risk. We also have included there information on the risk of the investment. So the investor or the prospective investor is encouraged to look at those at the prospectus with their broker or the investment advisor when they decide to make an investment. And most importantly, that document is reviewed by the regulator, and the requirement under the law is that we approve that document. And then there's the issue of information, which goes back to what I was saying earlier, in terms of as your role as a shareholder is to not just go to meetings and vote on issues. That's very good. Yes, you should be participating in that way. But you also have a responsibility to monitor the operations of that company, to see, what management changes are happening, whether the company decides to change its name, change its business strategy. These are things that you should be aware of, and the information on that is available, will be or should be available on the ECSRC's website, www.ecsin.com, because those companies that are listed and have issued shares or debt to the public are required to provide that periodic information to investors and the general public.
So it seems to me, and we're starting to wind down on our time here, but it seems to me that after 21 years, which is the anniversary that you are celebrating, you've got quite a solid structure in place to provide the sort of platform that's required for such a market to operate. You've got excellent relationships with brokers, represented here by two exemplary ones. You have all of that, but on the activity side, given what one may proffer the market to be a serious engine of economic growth and wealth creation in the currency union, how do we get this market, to the securities market, to really max out on its potential to do that, to increase wealth, to drive economic growth?
Yes, that's a very important question, and one, which we are all engaged. That is the crux, really. We aim to be a mechanism for wealth creation. So how do we actually achieve that? Well, firstly, we have to get more people participating. So we need to get more investors coming into the market and seeking to benefit from investing on the market. I mean, we want to do that in a number of ways. We want to expand the range of product that we have on the market. We want to reach more people, and programs such as these are important in doing that, in spreading the word, in raising the awareness, and we are trying to do much more of that. We're trying to reach people through different media as well. We are now engaged in social media, so to get more and more persons, especially the younger persons, involved in the market and knowing of the market, seeking to benefit from the market. We need to get more product, as I said. So we are again reaching out to more companies that exist in our region, to get them to list on the market. Because the more product you have, there'll be more chance of more activity happening. If one of the problems we have with people trading what they already hold, if you have a security and you sell it, I mean, you want to be able to reinvest that money in another security, so that you could. So we need to expand the range of product on the market. We need to look at new technology, and we are now engaged with a fintech firm out of Canada to create a digital asset trading platform in the region. So again, that is producing another opportunity for persons who may be caught up in the whole blockchain technology to benefit from that in an organized and regulated manner. We are looking at our diaspora in the anecdotally, there are more persons living in the North American and British cities than there are within our region. So we are looking at to see how we could reach the diaspora in a way to get them to give them the information on the markets and get them involved in marketing. We need to also expand our broker-dealer network. We have, of course, Nolan and Alana here, and we have 4 other broker-dealers, but we don't have a broker-dealer in every country. So we need to get that going as well. We need to have new other forms of intermediaries, investment advisors, and things like that, who are able to encourage and work with individuals to get them to enter the market.
So Trevor, in the interest of time, I mean, you've identified in that mouthful quite a lot of things that need to be put in place, implemented, massaged, to get this thing really going. And I'm assuming here that there are plans afoot to tackle everything that you've identified, and over a very workable and aggressive period of time. But Nolan, and I think Alana did mention something earlier on about the culture of the
Yes.
people as well.
Yes.
That has to be a big factor. And what are we doing about that? Quickly, in 1 minute.
That's a big hurdle, Tony, and that's the mountain we have to climb for us to start seeing more growth and for us to see the market actually being efficient in driving growth. The mechanism is absolutely in place, but the culture of family-owned businesses in our region and the hesitancy to actually open that up to ownership by individuals is something that we have to continue to address by continuing to educate the market. I think the only way that we're going to change that mindset is to actually deepen the investment savvy of the market by continued education, continued outreach, continued preaching what the benefits are, versus, because the one thing that a lot of individuals will tell you when you speak to them about issuing is that disclosure that's supposed to benefit all investors is an uncomfortable thing for some for some issuers or for some businesses. And it's not that there's anything nefarious per se going on. It's just that we are used to holding that information to our chest, and that is a hurdle that we can only overcome with education and continued education.
Yeah. And but even on the investor side as well. So Nolan covered like on the issuer side, people listing their businesses for investment. But even on the investor side, there is a lack of education, even from institutional organizations from the school level, for instance. Even young adults they don't understand. We don't understand. That was never part of our cultural upbringing, the value of investments and wealth creation. And our people are now at a phase where we can afford to, because of the foundations laid by our parents and those gone before us, that they have made it easier for us to move into wealth creation. And I don't think the population, the investing public, has really embraced that as yet. We still stick to the safe banking, see banking as the only alternative, but we see that the banking landscape is also changing and becoming more competitive, and really and truly there is need to pursue other avenues to grow your wealth, and have your money work for you after you work hard for it. Yeah.
And can I just say one thing from the regulator side, because we do have a role to play as well in this. We are responsible for market development to some extent, and so we are now looking at implementing or changing some of the policies and procedures that we have had in place for a long time that has not really worked too well for us. So we are looking at those and making changes where necessary. One of the most recent changes that we did was to reduce the capital requirement for license to become a broker-dealer. So we've reduced that under the new securities. We've drafted a new securities law, and the whole aim is to promote and get more different types of intermediaries involved in the market. And I can say as well that we have a lot of interest from licensees who want to offer additional products on the market. We're now looking at least 3 companies that are looking at offering mutual funds. So there is a lot being done, and we're hoping that, from very soon, we will see a lot more diversification on the market, and of course, more persons, getting involved and becoming interested. On the education side, I do agree as well that there's a lot of work that needs to be done there, and we are also involved there as well.
I want to thank you all for spending this time with the viewers, your 21st anniversary. I'm addressing the people here representing the market and your brokers who are here with you. I hope we can have follow-up programs, and this, I hope, has been informative and can help the people in the currency union to best understand how you offer an alternative for creating wealth. This has been another edition of Let's Get Down to Business. My guests were Mrs. Alana Joseph from the Grenada Cooperative Bank Limited. She's the Executive Manager of Wealth Management and Financial Services. Mrs. Nolan Gabriel Boy, who is the Head of Regional Operations, First Citizens Investment. Ms. Alucia Fisal, the CEO of the Eastern Caribbean Securities Regulatory Commission. and Mr. Trevor Blake, the Managing Director of the Eastern Caribbean Securities Exchange. Thank you for viewing.